Okay, and we're back. We're back and we're back again. So hopefully, okay, actually is loading this time. So let me just make sure that YouTube's loading and that we are live again. It's always a bit of a ball like this. All right, we're live again. Share, copy, bang it in the Telegram. And then we'll get started. It'll only be a super quick one. I just want to cover what happened today. Okay, there we go. So hopefully, is it working? Yeah, beautiful. Right, it's working. So let's get into it. Let's break down the charts today super quickly. Let's keep it nice, short and sweet. So yesterday, if you watched the review, essentially, we had hit this 4-hour pool of liquidity. These relatively equal highs, right, on the 4-hour, this week high on the 4-hour, and this high, we had hit both of them after a pretty large expansionary day yesterday, which was overextended from the past 5 days. The average daily range of the past 5 days, we were overextended. So we were at this pool of liquidity, and on the daily, we're at this balanced price range, this inverse fair value gap right here that had been respected 1, 2, 3 times, 4 times. We'd respected it, although we wick through, the bodies show what's really going on. So we respected that. So yesterday, when we ran out these highs into that daily inverse fair value gap, I was basically expecting some sort of retracement, a deeper retracement into this 4-hour fair value gap and back into this weekly inverse fair value gap / balance price range, right? So this is the inverse fair value gap, this is the balance price range. So I was expecting a deeper retracement into this 4-hour fair value gap before looking for that continuation higher. Because yesterday I did say, I'm anticipating price to run up into this high and make its way through this candle, this rejection block, which we just absolutely melted through. Let me move the camera. But we didn't get that retracement. And instead, we got a small retracement here on the 1 hour. So if we look closely here at the 1 hour. So we hit that key pool of liquidity at the key level. It's reasonable to anticipate a change in order flow and price to have some sort of retracement, right? Whether we come down, sweep out the low, and then make our way out. That's probably what I'd be looking at, something like that. But instead, when I hopped on the charts in the morning, as you can see here on the 1 hour, we basically ran out this pool of liquidity. Then overnight, over Asia, we swept this H1 week low into this bullish fair value gap. And then we also left behind this H1 week high right here inside of this volume imbalance, right? So I was thinking, right, this is essentially, I'm looking for price to have a deeper retracement here. And so I was looking potentially to see price come off this week high and push lower into this gap. That's what I was anticipating would happen. Especially because we had SMT between this high and this high on EU. So I thought, right, SMT at the key level after a key sweep, I'll be looking for like confirmation with some sort of change in order flow, which we didn't quite get anywhere on the 1 hour. And then I'd look for that continuation into this fair value gap right here. But instead, essentially, we didn't get that, right? We ran out this week low. Then I was looking for a potential continuation lower from this week high here on the 1 hour, which is Asia high. And as you can see, we started rejecting that level, but at the same time, we had no clear change in order flow here for me. There was nothing good enough for me to actually confirm that change in order flow. As you can see, price was pretty impulsive and there was no swing lows or market structure here that basically validated going short here, right? With a stop loss above the high, targeting the low, which would be like a long on the EU. And basically, at that point, I was like, right, I'm just going to be patient. We'll see what happens. Price continued to push higher here and then took out the previous day high above these weak highs once again. And so to me, that was even stronger. I was like, right, we've got SMT twice, this high and this high, SMT with EU, right? I've taken the lines off now, but we had SMT with EU at both those highs. And we had a manipulation of the previous day high. It's also a 4-hour swing high at the key level. So at that point, I was like, right, I'm looking for a obvious change in order flow lower, right? And so we didn't quite get that, right? The thing is, I was also waiting for 1:30 news because I know the news was likely going to manipulate today. We had a final GDP and quarter over quarter and unemployment claims. And so I was anticipating, right, after news, that is when I'll look for an entry. If we have confirmed some sort of change in order flow around 1:30, then I'll see if I can get an entry. And I would be looking for something like, this is Asia, London manipulated, the high of Asia, the weak high, the 4-hour weak high, look for a change in order flow, and then get in short somewhere around here, for example, right? And target, maybe the midpoint of that, just to get a fair RR. And I think that's pretty normal to expect, that external to internal range liquidity like move, right? We usually move from external to internal. So that's what I was anticipating. But obviously, I waited because I wanted to see news pass and then get a stronger idea of what was going on. And as you can see at about 1:30 here, this was when we got this massive impulsive candle to the upside. Price had already basically, I probably would have tried to get in short at this bearish fair value gap right here. Well, I mean, by short, I'll be getting long in EU or GU, but I'll be looking for price to respect this fair value gap. And then if we were respecting that at 1:30 and we were still below here, I would have looked to potentially short this gap lower. But instead, what actually happened was we had this 1 hour week low sweep into this bullish fair value gap. Then on the 15 minutes, we had essentially a market structure shift here. So if I drop this on right here, we had a market structure shift, right? We broke market structure, started printing bullish fair value gaps, started disrespecting bearish fair value gaps. And so if you wanted to go long here, you could have potentially gone long on this inverse fair value gap right here. Stop loss below the low, and then you would have targeted the high, right, for a 1 to 3-ish, I think would be fair to say, unless you got in on this fair value gap. But for me personally, I had that bearish bias. And so I wasn't even looking to go long because I wanted to see price move from external to internal range liquidity today, and see something like that and then manipulate from there and go higher. But we didn't get that. Essentially, we just straight up had a tiny little manipulation and then ran and used that news driver to push us all the way to the high that we were talking about targeting yesterday. And so, it's Thursday, right? I don't expect the week to continue to expanding towards these week highs. Now we've hit this daily week high, right? I think it's unlikely that we're going to take out these tomorrow, but honestly, looking at the past couple candles, like I wouldn't even put it past the charts to want to do that basically. But I don't know. I think tomorrow I'm going to be very, very reserved at trading. Right at 130, we've got the core personal consumption expenditure. I think that's what it's called. Personal consumption expenditures. That's it. It's like a measure of inflation, and that will probably have some sort of impact on the market tomorrow. So basically, coming into the morning, I want to see what price is doing. Right. I was wrong about my bias today. Wanted to see it go short, but at the same time, I basically placed a long on EU at one point. I was planning on longing it into this week high, but then because we had these week lows here, week low here, the overall bias or drawn liquidity was this low over here, and also we were at 4-hour bearish fair value gap, daily inverse fair value gap. It was really quite a low probability thing to do. And I closed it out before it got entered after, I realized I was like, this is low probability. It's a bit of a stupid trade to be taking. And also I was kind of uncertain about my bias on the DXY. So today I just decided, close that position out, and ended up being the right decision, especially like taking a trade against a higher time frame. Drawing liquidity is not always the best idea. I mean, if you've really got a strong bias, and order flow on the lower time frames is showing you clearly that you can trade against the high time frame bias, then I don't think it's a bad thing to do. Like, I could have taken this trade lower here, but because it is against the high time frame bias, I wanted to see more confirmation. And I'm glad I did, and I'm glad that's really my rules, to just wait for obvious change in order flow. Now, what would have been a change in order flow? Probably probably a close below this little fair value gap right here. Definitely a close below this fair value gap would have been a change in order flow. Because we did have a market structure shift after sweeping the previous day high right here with a bearish fair value gap. But it just, obviously I wanted to wait for the time to be right as well. But when you're trading against the high time frame order flow, it is, you want to wait for more confirmation. And so I was just, that's my rules. I shouldn't have really placed the trade in the first place. But before I was entered, I noticed, I was like, right, uncertain on the DXY, are we going to basically do this? Right. So what you'll notice is when we hit a high time frame pool of liquidity, right, price tends to come back, sweep the most recent low, push higher, right, and then come back down deeper into whatever the larger high time frame fair value gap. And so I was thinking, when we had this run right here, is that this low? Are we going to see this high? And if we do see this high get taken again and have a double sweep, then I'd like to see a clear change in order flow, and then I would get in short, right, and ride it lower. But we obviously just didn't get that, especially we closed above this bearish fair value gap right here, this blue box. And for me, and check, because I only came on at 1:30 to look at the charts after news, and by that point we had already disrespected that. We had closed above the 1 hour what is this, a volume imbalance, and then we used that to propel ourselves higher. So trade I didn't come to fruition once again today, but that's fine. It's just the nature of the markets. Sometimes you'll be right, sometimes you'll be wrong, and I didn't take a loss or anything. And if anything, I was quite proud of myself for preserving my capital, protecting my capital, and closing the trade when I realized it wasn't high probability and the markets weren't really aligned for a good trade. So today was a capital preservation day, and it's been a bit slow recently. It's just been a bit slow recently in the markets. I took a win maybe a week ago or a week and a half ago. I can't remember what day it was. Or not last Sunday, the Sunday before. So a while ago. And since then, honestly, I haven't really seen many opportunities. UCAD and JPY have been trapped order flow. I think they broke out today though. So that's nice to see. Potentially you can trade these now. And then gold and silver, they've just been ripping to the upside as well. So, I mean, I haven't really been looking at them too much. I've been focused really on EU, GU. So that's it for today, really. I mean, tomorrow we hit the draw on liquidity. You know, we've got these equal highs above, and I really wouldn't be surprised if tomorrow the market just like rips to the upside and takes them out. But key level, probably anticipate some sort of retracement, maybe just a small one, right? We've got this H1 week low right here. Potentially we come down, we run out this week low right here, right? Overnight or maybe during London. And then we see something like that, potentially, right? It's just an idea. We'll see. I always analyze the charts in the morning after Asia, around 6 a.m. UK time. So we'll see what price is doing then. But we've got this H1 week low. I wouldn't be surprised because price, you know, when it's close to its draws on liquidity, it expands much faster. So I wouldn't be surprised if we see something like that, right? And then something like that tomorrow. So we'll see. I'm going to be on the charts tomorrow. Focus will be around 130-ish for core personal consumption expenditures. And yeah, that's it really. I mean, nothing much to report today except what had happened. And I was in capital preservation mode, basically. Watch yesterday's review if you want to see me talk about how I was expecting a retracement and then push towards these highs. Other than that, I'll drop a comment below if you want me to specifically talk about certain things that I'll do in the next one. I'm speaking fast. I'm trying to figure out what tempo to do this and all of that. But for the time being, hopefully you enjoyed it, and I'll see you in the next live stream.